Hi guys, trust you are doing fine. You are welcome to my channel where we discuss the different ways of making money online. For the past few days, we've been exploring the stock market as an option for us to make money. I bring strategies and principles for you to make more money online and how to take advantage of opportunities. So today, we'll be looking at an opportunity to make money, which is stock market crash. Some people are like, I thought market crash is a bad thing. How do we make money from it as if it's a good thing? Yes, stock market crash is not as bad as the way the media paint it. In this video, I will show you how to make money from stock market crash. So just before we start, let's do an introduction of the stock market. Stock market is a market that includes everything related to stocks. It includes buying stocks, selling stocks, stock exchange, anything you can think about when it comes to stocks are all included in the stock market. By this explanation, it means that the stock market is a broad area, is huge, but we use some indices to track the stock market. And the three most popular indices used to track the stock market are S&P 500 ETF, Dow 30, which is also known as Dow Jones Industrial Average, and finally, we also have the Nasdaq Composite. So the S&P 500 represent the 500 largest publicly traded companies in the US. They are large and they are publicly traded. It's majorly used to track the stock market. We also have the Dow Jones, which track the 30 large publicly traded companies in the US. Now, these companies are mostly the blue chip companies and have been existing for years. So why am I talking about this? Is because when we talk about the stock market crash, somebody can still be getting money while the market is crashing. On the media, you hear about the stock market crash. They are mostly talking about these popular indices like S&P 500 and Dow 30. We'll look at them and see what's happening in order to analyze the stock market crash and how to make money from it. You are seeing an example of the stock market chart. So this is the XPS 500. You are seeing it, S&P 500 index since inception, which was in 1972. So you see that moving flat for most of the years, then it started going up. You will discover that it will go up and it will come down. This chart you're seeing is the price. So the price will go up and also come down. It will also go up again and come down, go up and come down. So over the years, that's the way it has performed. And the stock market world had developed different terms to explain decline in stock markets. And in this video, we'll look at those terminologies that I've used to explain the decline in the stock market. One of the most important ones, the one that makes the largest noise and is always on the news, is stock market crash. So what is stock market crash? A stock market crash is a rapid and often unanticipated drop in stock prices. So when we talk about the stock market crash, looking at a sudden unanticipated drop in market prices. So when the decline is sudden and rapid, is unanticipated, and is often a two-digit decline, that's what we call a stock market crash. And most times it happens within few days, 1 day, 3 days, 7 days, and it's a sudden decline. So let's look at an example of what most of you can relate with, which is the 2008 financial recession. You can see that the stock market 2007 was high, then in 2008 it started declining. So in 2009, see the decline in 2009. So this decline, that's sudden, dramatic, unanticipated, and occurs over a few days, is what we call stock market crash. Also, a lot of you can relate with what happened with COVID-19, that in March of 2020 there was a stock market crash. Also, see the price and just drop suddenly and significantly within days due to the effect of COVID-19, which is what you are seeing here. So this sudden decline in the stock market price, that's about 2-digit, 15%, 20%, 34% within few days, is what we call stock market crash. And I must say that people actually lose money during stock market crash. The two major ways that people lose money during stock market crash is when they sell during the crash. When there's a crash with the stock market, there's always a rebound. But some people are always panicking. They're always scared. The crash has occurred though. And because they are panicking, they sell their shares. And because it has crashed, the price has gone down, they make loss. Another way that people make loss in the stock market is by buying too many stocks on margin. That means you are borrowing a lot of stocks and you've borrowed it and the market crash, which means you borrowed it at a high price and now the stocks are at a lower price than what you borrowed them for. Now, there are different causes of stock market crash. Let's look at the 5 causes of stock market crash. The first one is the bull market. When the market keep going up, 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 up. You and I have heard this statement that whatever goes up must come down. So in stock market, when the price keep going up, always going up, always going up, always going up, year to year, haba, expect there will be a time the market will come down, it will crash. It's just the law of nature. A bull market, which means a market that the buyers are so much interested in the shares and are ready to pay anything for it. Also, it's also caused by speculation. People thinking that a stock will keep rising. The price of a particular stock or of the S&P 500 will keep rising. So they keep buying, that it will rise in the future. Like what's happening with Bitcoin. It can also lead to a crash in the market. As you are buying it and the price is increasing, there will be a point that someone will be like, hey, the price has gone so high that I don't think it will increase any further. So people will be scared now, start panicking again and start selling. And because there are more sellers than buyers, it will lead to a sudden decline in price, leading to stock market crash. Also, what causes stock market crash is when the financial ratios are so high, when the share price is overpriced, overvalued. The finances are no longer making sense because people think that the price will keep increasing. This happened with Tesla. People anticipated that the price will keep rising, so they keep buying. But there will be a point that people will be like, the difference between the current market price and the intrinsic value is so wide that the market will react to it by crashing. Also, I told you that it can also occur by using margin and leverage to buy shares. So you are borrowing a lot of shares. You borrow so much that the market reacts. When the market reacts, it is people that are in the market that will react to it and say that the price is so high that they are predicting that it has to decline. Also, it's also caused by market bubble. When people think that the price of an asset would keep going high, like what happened with the dot-com bubble, that the internet age has come and the price will go so much higher in the future. People take it at a higher level beyond what it should be, that over some time, people just get tired, get frustrated, and it will lead to a crash in the market. There are also external factors that can cause market crash. For example, in 2020, there was a market crash due to COVID-19. Large corporate hacks, changes in federal laws and regulation, natural disasters, and COVID-19 can cause market crash. Over time, we've studied the history of the stock market crash, and I showed you examples when there were crashes in the market. That's not the only time. It has been since time immemorial. The tulip mania, where people were obsessed with tulip, and the price of a tulip was even more than the wages of 10 working men. So we also have the panic of 1907. We also have the Wall Street crash of 1929, which is known as the Great Depression. Also, in October 1987, there was Black Monday. We also have the crash of 2008-2009, which I've explained to you as the Great Recession. Even in 2010, there was even a flash crash. And in 2020, coronavirus stock market crash was all over the news. So over time, there have been crashes over and over again. The DJAG, which is the Dow Jones Industrial Average history from 2017 to 2020, you can see that the price was moving up until 2020 in March. Due to COVID-19, there was a crash. So we can see that over and over again that stock market crash do happen, and people lose money when they panic to sell. So if you want to make money, do not sell your shares during stock market crash. Do not sell. In fact, I made this video to tell you one thing, that during stock market crash, go and buy shares. In fact, that's the best time to buy shares because the price is low. If you have enough money, go and buy as much as possible, because history has shown us that after some days, after some months, like 3 months, 4 months, the market will always rebound. Not just to its original price, but to a price higher than what it has been. Over time, you can see that whenever the market crash, it always goes up after some time more than the initial value. See, even the one that happened in 2020, the market still rebounds and went higher than its value. In fact, do you know what was even discovered? If you bought S&P 500 in 2020 March during the stock market crash, as of today of making this video, you would have made a 200% increase of your price. So in order to make money during stock market crash, buy shares. Do not sell. Go and buy shares. In fact, buy more shares than instead of selling your shares, because history has shown us that it will always rebound. I know that in finance, that past performance is not the best predictor of future performance, but for S&P 500, I can tell you that it will always rebound with what we can see in the meantime. It's not a financial advice, of course, but history has shown us whenever there's a stock market crash that the market will always rebound. So don't be scared of stock market crash. Hey, the market is about to crash. There are a lot of noise, a lot of news about stock market crash. People predicting that it will crash, it will crash. Hey, the truth is that nobody knows when the market will crash. Nobody knows when it will crash, because history has shown us that the market would always rebound. People are saying that there will be a US stock market crash in 2021. It may be, it may not be. I've told you that nobody's aware of it. But as of now, there are no concrete information to assert that there will be a crash this year. I know that Biden is planning to increase the tax rate from capital gains. As of now, the capital gain tax is about 23.8% and is planning about 20% increase. Capital gain simply means the gain you get from investing. He is planning to increase it to about 43.4% for the wealthy people in society, which means for people that make about $1 million and above in the society. So it's for the rich and the very rich, or for top companies and make a lot of money from the stock market. So yes, even though he's planning about 20% increase in the stock market, people are predicting that it will lead to a crash. Hey, it's just a clickbait YouTube video predicting what they are not sure about. It may lead to it, it may not lead to it, but there's no law that because the tax will increase, market crash would occur. History has not favored that line of thought. If there's a crash, it will be all over the news. You and I will hear. And I've told you that there's no need for you to panic. In fact, it's even the best time to buy shares instead of selling shares, because it's an opportunity in disguise. Also, very close to the stock market crash is what we call stock market correction. It's similar to stock market crash in the sense that it's a 2-digit decline. It's usually a decline between 10% to 20% in the stock market. But the major difference between a correction and a crash is that a crash happens within a day or few days, and a correction mostly occurs within months, 2 months, 3 months, 4 months. History has shown us that for the US stock market, it always rebounds after 4 months. So even when there's a market correction, as what implies is correcting the market, it means that the price of stocks has gone so high that it has to decline in order to correct it to get the actual value. So if something has been rising up, so the stock market would decline in order to correct the market so that it will be the true value, not some optimistic biased view of some investors. But whether it's a crash or it's a correction, history has shown us that it always rebounds within days, within months. In fact, in less than a year, to rebound. So no need to fear. And that's how you can make money from stock market crash and correction, by just buying more shares with the hope that it will rebound. Now, there's another terminology that's also used in the stock market, which is buying the dips. Buying the dips is just a short-term decline in stock market price. It can be for a day or for months, just a short-term decline. So if the market has been going up, when it comes down, you can always buy at a lower price, hoping that the market will go up again. Just a short-term decline in asset value. And I've explained to you what we mean by market bubble, a rapid escalation of market value, particularly in the price of asset. And it usually occurs when investors are overpricing and speculating with a stock. Because they're overpricing it, there will always be a crash or a correction in order to correct the anomaly. That correction for a bubble is what we call bubble crash or bubble bust. I know you've heard of bubble bust. So it's similar to stock market crash. It just means that the price has been overpriced, that it has to be corrected. It has to decline in order to correct that overinflation. And a good example is what happened in the early 2000s with the dot-com era, where there was dot-com bubble bust. People were predicting that the internet companies' value would go so high. Yes, they did. But it took them about 20 years to become so high. They overpriced the asset that there have to be a bubble bust in order to correct it. Don't see stock market crash as a bad thing. Most times, it's always to correct some anomaly in the market in order for us to get the true value of a stock or a company. Yeah, thank you for watching this video. Please don't just click out. Ensure that you smash the like button, smash the subscribe button. Like the video. It takes nothing to just like a video. Please like this video and subscribe to my channel if you're interested in stock market and different ways of making money online. Thank you. Bye.